Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to the show.
Jim, pleasure to be back on the show.
You've been fairly bullish about the resource juniors, but they seem to have lost momentum during the past few weeks. Some say this is an example of the old saying, sell in May and go away. Do you think the resource juniors are already heading into the summer doldrums?
Well, Jim, for most of this year, the TSX Venture Juniors, listed juniors, have traded $50 to $100 million worth of stock per day on the TSX Venture Exchange, and that has been sort of 60 to 70% of the total traded value. Clearly more money flowing into resource juniors than all the old non-resource listings involved in cannabis and crypto and whatnot. But during the past week and a half, we have seen the value traded sag to $35 million to $45 million per day. That's a significant drop of money flowing in. It's as if everything has gone on pause. Now, we haven't seen a reversal in where the money's going. The resource listings are still 50 to 60% of the traded value on the venture exchange. So that is still going good for the juniors. But the question is suddenly everybody going to take a break and go away in the summer and take off? And I continue to be of the opinion that no, what we're experiencing right now is a lull in response to the shakiness we've seen in the general equity markets in the build-up towards the half-point anticipated interest rate hike, which took place finally on Wednesday. And oddly, the market responded positively to it, not because it's particularly happy that we now have the prime rates back to 4%, but because Jerome Powell suggested that, well, we are still going to consider rate hikes, but we're not going to be quite as aggressive about it. Now, they are ending quantitative easing in a passive manner. They are no longer going to be printing money. They're simply going to let the balance sheet shrink by allowing the treasuries that they hold to expire. And so that means no more additional money being pumped in. And the market's been concerned because, yes, when we had this big quantitative easing response to the arrival of COVID in 2020, that created a lot of liquidity. And with COVID in retreat and the economy coming back, we did see inflation pressures emerge from the rebound of the economy. But another problem has been the lingering effects of supply chain disruptions caused in part by the COVID problems in places like ports and especially in China. I mean, Shanghai's been on lockdown for 4 weeks. Now Beijing has COVID within its boundaries, and they're trying to snuff that out without being quite as ham-fisted as they were with Shanghai. I do not know if they will succeed, but China continues to be a source of supply chain disruption, and that's going to export inflation to the West. And then, of course, we now have the Russia situation, and part of the supply disruption is pure physical by stuff not coming out of Ukraine anymore because it's simply been stopped, and also because of the sanctions war that the United States and its allies have started against Russia, which is preventing a lot of Russian goods from reaching Western markets. So we have these persistent inflationary pressures, which if they are too harsh with their monetary tightening, we have the danger that the economy contracts substantially. And GDP was actually down slightly during the first quarter, so there is already a pause in people's enthusiasm for things going forward. And of course, for gold, as we see higher real interest rates emerge, the attractiveness of owning gold diminishes, so gold is supposed to become weak as a result of that. And we've seen gold pull back in the last while. The GLD ETF, it's packed on 3.5 million or so ounces since the start of the year, but in the past week we've seen finally a run of withdrawals from the ETF, this particular one, the most popular one, but it's still up about 12, just under 12% from the start of the year. But the other sort of factor with gold that people sometimes forget about is that people own it as a hedge against uncertainty. And we're in a period now of extreme uncertainty. We do not know how this Russia conflict is going to resolve itself. The China-Russia alliance is threatening to geopolitically rearrange the global economy. The U.S. dollar for now is still the single reserve currency. And, of course, with many countries have not explicitly condemned the Ukraine invasion. They're sitting on the fence, which is a very big difference from during the Cold War when there was a clear divide between those that were with the Soviet Union and those that were with the West. Now we have fence sitters in the middle wondering about the wisdom of the U.S. dollar as a reserve currency. What if the United States gets mad at such and such country, like it has with Iran or North Korea? Maybe it would be good to have the U.S. dollar not so important. And if the U.S. dollar loses its supremacy, then there's going to be an interregnum during which gold demand is going to go up substantially. And the leaked draft of the Supreme Court decision to overturn Roe and Wade, that now clearly, if this actually comes to pass, it clearly divides Americans into two distinct groups, which are also geographically very distributed in separate places. There are the so-called blue states and the so-called red states. And given the way the politics are shaping up with Republicans controlling likely the House and Senate and possibly ultimately all three branches and already controlling the Supreme Court, it's hard to imagine that the majority of people who think abortion is okay, that women should be free to decide what to do with their bodies, are going to let some sort of theocracy be imposed in the United States. So there's a distinct threat that the explicitness of allowing the states to turn into anti-abortion states and pro-abortion states could divide the country in a way that results in the breakup. And if the United States breaks up, what becomes of the status of the U.S. dollar reserve currency? Now, I'm hopeful that all of this resolves itself in a positive way, that ultimately, if it is overturned, they go and pass a law that makes abortion legal up to the viability period for all of the United States, make it a proper law rather than just a court decision. But it remains to be seen when this will all unfold, how it will unfold. But there's a distinct risk of an internal implosion. Now, with regard to gold as a hedge against geopolitical uncertainty of the diminishment of the U.S. dollar as a gold reserve, as the world's reserve currency, people have been lulled into some degree of complacency when they look at the official bank sector holdings. And we know that Russia has been increasing its gold holdings in the past decade, and that's understandable. We now know what they had up their sleeve and why they wanted to own a lot more gold. But Russia's still in sixth place. The odd thing is China is in seventh place, and its official holdings haven't changed since 2015. In 2000, China's official bank reported owning 13 million ounces of gold. That has grown to 63 million ounces during that period, so to 2015. But in the past 2 decades, China has produced 230 million gold ounces. It is the world's biggest gold producer now. So that's 180 million ounces produced by Chinese miners, many of them state-owned. The biggest, in fact, is entirely state-owned. Who did they sell that 180 million ounces? Did Chinese consumers buy all that gold so that they can wear jewelry? Well, oddly, China is an importer of gold, and it may be that that market operates separately from the gold production market. Did these gold producers blow it out into the hands of gold bugs around the world during the past 20 years so that these 180 million unaccounted for ounces are dispersed around the world? Or has China, through its various state-controlled entities, been secretly accumulating gold. And if this were the case, this is assuming they haven't actually gone out into the market and bought physical gold from other parts of the world, their official holdings would tally 243 million ounces. That would put it in second place behind the United States, which has 262 million ounces. So China potentially has a secret official gold hoard that's 93% of that of the United States. And why has China not acquired any gold, and why is this gold production unaccounted for? Well, they don't really want to advertise that they're like counting on the future demise of the U.S. dollar as a reserve currency. So this absence, this China doing nothing in official bank terms and 180 million ounces unaccounted for, one should worry about that. And that's a good reason to be optimistic that gold, even if we end up with a high real interest rate environment, that makes gold as a monetary asset not very interesting. It is still valuable as a hedge against long-term insecurity, uncertainty, where the U.S. dollar ceases to be the global reserve currency and gives the Americans the power to shape a sanctions response to a thug country like Putin's Russia doing what it wants around the world, and China allying itself with Russia, saying we are best buds going forward. Gold is the only way really to hedge monetarily against that uncertainty, which would alter the world in a very drastic manner. So I'm optimistic that with even though it's May and stocks have gone down recently, this is a temporary response to the fear about the over-tightening that might create a major economic contraction. And that's also a reason why, gold may still be weak in the interim, but it's a reason I tend to focus on gold exploration juniors, because they don't really have any gold to sell, so it doesn't quite matter what yesterday's price or tomorrow's price or today's gold price is, so long as the trend is up in real terms. And also for that last week, I introduced the concept of lithium mania 2.0. I've been doing a lot of homework, updating all my companies, which ones have lithium projects, what stage they are in. And here's an interesting thing. With lithium carbonate prices, I can guarantee you that they will go down. But that's actually a good thing for lithium mania 2.0, because at $36 a pound where it spiked to recently, that's not a sustainable price, because at that price, the lithium-ion battery in all these cars becomes too expensive to make these EVs affordable when it comes time for mass adoption. And companies like Tesla, they're priced for an EV explosion beginning in 2025 and continuing on to 2040. Unless there is a six-fold increase in the 100,000 tons of lithium metal that's produced right now over the next 5 to 10 years, the EV rollout cannot happen unless some alternative battery to the lithium-ion battery is adopted to provide these cars with the energy needed to drive around. So there's an example of a sector where the juniors with the potential to find these pegmatite bodies demonstrate that they work at $10 per pound. Now, if lithium carbonate crashes back to $3 a pound where it was not too long ago, well, then you can kiss your lithium, your electrical vehicle explosion goodbye, because there won't be enough lithium available to build all those cars that these people supposedly will want to buy, in which case, again, Tesla would become the best short. So watching lithium carbonate prices trend down back towards that $10 level and then stop there, maybe bounce around between $10 and $15, that's actually a good thing, because in that range, it is feasible for all these future electric vehicles to be built and equipped with a lithium-ion battery. And it also becomes this fantastic window for the juniors to find these pegmatite bodies, figure out the biggest and richest ones, and push them through the development, feasibility demonstration, permitting pipeline, and make the EV explosion a reality.
What has your bottom fish Endurance Gold been up to?
Endurance Gold, a week ago or so, announced that it has resumed drilling at the Reliance project, which is sort of northwest of Vancouver and in southwestern British Columbia, east of the Braylorn district where Talisker Resources is busy. That's a district that produced over 4 million ounces over the past 100 years. The Reliance project it's an epizonal orogenic system. It's based on the antimony and arsenic that's present in the gold mineralization they found. This is quite high up in the vertical system compared to the Talisker Braylorn system. And this is a new discovery made out of an old one that, probably 80 years ago, the senator showing had been found on the slope of that mountain, which faces what is now Carpenter Lake. This used to be a valley, which was BC Hydro turned into a reservoir during the late hydro reservoir during the late 50s. And Charlie Boitard in the 80s went in there, followed this up, and was chasing sort of vein structures and intersected some good grades, but never really understood the structural controls of this system, drilled a bunch of holes, and eventually gave up. And Endurance acquired 100% of this project in late 2019, and they spent the past 2 years systematically sampling the project area. And they've now got a corridor. It's about 300 meters wide, bounded by the Royal Shear on the southwest and the Treasure Shear on the northeast. And within this highly altered corridor, they have started finding not just the feeder-type mineralization that Charlie Boitard chased at the Imperial Zone decades ago, but this flat-lying mineralized structures that are running 10 to 15 grams per ton gold over decent widths. And the idea is that these structures, or these sort of lenses within this vertical shear structure, could persist down to 1,000 meters. And they produced some pretty good results last year. The South Eagle Zone, they're extending it in the southeast direction. The property has about 3-4 kilometers running room, but the zone structure, really the strike of it's probably limited to 3 kilometers. And the idea has been, well, if you take this down to 1,000 meters and you get a grade in that sort of 5 to 15 gram per ton range, you have a potential future target of 2 million ounces. Part of it may be open pittable, but most of it probably underground mineable. And they've resumed with an RC drilling program. They found the RC program very effective in mapping the shallow, highly altered part where core doesn't get good recovery, whereas with the RC, you chew everything into little bits anyways. And they were able to map the presence of these various shallow southwest sloping bodies. And so they resumed this to kick off the season, march the drill up the hill, and do this program ahead of in early June, going in there with the core rig to do 8,000 meters of core drilling. And that will go deeper. It'll also test along strike what the RC has already outlined, and it will also test for repeat occurrences of these shallow dipping lenses, because this whole thing is speculated to have some sort of rhydal structure system where you have these flexures within the shear zone that end up becoming mineralized, series of mineralized lenses. And if you can prove that and that this repeats, then you could quickly build up to these 1 to 2 million ounce range. But that's been sort of the limit of this relatively small property, the Reliance. It's basically a one sort of shear structure zone. But this week they announced a deal to increase the land positioning by optioning the Olympic property to the northeast from Avino Silver and Gold. And they got it on pretty good terms, $100,000 cash, 1.5 million shares, and $300,000 expiration. And this Olympic property straddles Carpenter Lake, and they actually own claims over Carpenter Lake, though I doubt BC Hydro will ever let you do anything even underground this lake. But on the north shore is the old Minto mine, and this was something that was operated, pre-70s, 80s, pre-modern era. They were chasing these discontinuous veins. And what Robert Boyd of Endurance Gold thinks is that what we're dealing here is a potential series of parallel royal treasure shear type corridor structures that repeat themselves. And the Minto is one. It probably crosses the lake and continues on the other side. And there's another one, Kelvin, showing. There's nothing on the north side, but there's a showing close to the water's edge where somebody found some gold. But that north shore of what is the Bendor Pluton, and which is believed to be the big engine in the region that created Braylorn and the Reliance gold system, the northwest shore is like very heavily wooded, plus it's obscured by an ash cover from the Meager Mountain volcanic eruption 2,500 years ago, which blanketed the area and pretty much obscured all the bedrock. So the Reliance structure was found because some creek created a gully, and so prospectors walked up it and found some interesting gold showings and poked around, but never quite understood the geometry of this system. In these other areas here, it may have been just the luck of the draw that no river or creek cut through the mineralized zones, but there is potential, at least in the Minto, if you take the Minto northwest, southeast direction, cross the reservoir, and continue up the mountain, there's potential for a corridor there and for a second one. So if this hypothesis is correct, and these royal treasure shear type corridors repeat themselves maybe twice, maybe three times, then the sort of limit of the sky goes from maybe 2 million ounces to 4 to 6 million ounces. So this news release, which did nothing for the stock price because most people probably don't understand it, and it was happening during a period when the market was tearing its hair out about gold. This really takes what is a single zone play and turns it into a district scale, because it expands this sort of 2 kilometer wide property to 5 to 6 kilometer wide property, and it gives the potential for 3 sort of 2 to 3 kilometer long structures with potential for this high level gold that could persist down to 1,000 meters. So this was a very important development. The RC drilling does allow them to use an XRF gun to take arsenic readings. Last year we were a bit disappointed because they only did core drilling during the summer. With core, if you take an XRF gun, you get any result that you want, so you cannot statistically quantify what a meter interval of core is. But with a meter bag of RC chips, you can use the XRF gun to come up with a statistical reading, and arsenic is very closely associated with gold grade. We were able a year and a half ago to predict what was going to run decent gold. And so they are going to be doing this, so we could start seeing within a month, data flow when the turnaround happens for actual assays. It's hard to tell, but with regard to the Olympic property, they're going to go in there, not drill it this year, but do the same sort of sampling work, hacking their way through the bush and doing fir needle sampling, because the fir trees in that area suck up the arsenic that's in the soil for some reason, and they were able to establish a distinct anomaly over the Royal Treasure Shear Corridor in terms of these fir needle biogeochemical sampling survey. So that could tell us by the end of the year how many such biologically or botanically anomalous corridors of arsenic there is. And of course, they still need to prove that there's gold associated with it. But in the bigger geological context, if they're going to find the arsenic there, and they already have small showings near the shore of Carpenter Lake, it is very likely that we will be able to see the zone potential multiply 2-3 times if indeed this first sampling delivers the arsenic goods later this year.
John, you're coming to Vancouver this month to attend 2 back-to-back conferences. What's the first one, the Metals Investor Forum, all about?
Well, the Metals Investor Forum is different from your usual conference in that it's limited typically to 25 to 35 companies. Now, this one is happening on May 15th, 16th, a Sunday and a Monday. My session is on Sunday at 1 o'clock. There are 7 speakers total, people like Gwen Preston and Eric Coffin and myself, and there's 25 companies total in this Metals Investor Forum. Now, 5 companies are in my session, and the way these MIF conferences work is the speakers all have to be making their living from selling a newsletter subscription, not from being sponsored by a company to do some pretend homework and then discover, oh, I like this company a lot, until the company stops paying you to like it. No, you have to be trying to make money selling a newsletter of some form. And in my case, it's Kaiser Research Online, which is a research platform which covers all the Australian and Canadian resource sector listings. So it's for do-it-yourselfers who can go in there, and if they know what they're looking for, put in a complex query, get the results, and then follow it up. But I also am a super user of it myself, and as a result of my super use, I come up with a collection of companies tagged as bottom fish, as well as a smaller collection of favorites, which are basically bottom fish that have graduated from having some important missing piece that keeps them stuck in the gutter. And so that's how I make my living, $450 a year for that membership. And the way it works is we invite companies that we cover as recommendations. So we've pre-vetted them already. We're not picking dogs that are going to lose my customers money because I'm actually making money being paid by the company to like it. No, we need these things to do well so that we continue to sell subscriptions. So that's the model. And the way the conference works, it's free, but you have to register in advance. You can go to my homepage, kaiserresearch.com, and click on the link and register. The sessions, each session starts off with sort of 20-minute macro, big picture talk by the speaker in this case. And then each of the companies has 10 to 12 minutes to do a presentation. And that's short, but the whole point of it is to get the audience's attention, show them what the story is, what the value creation story is, and then lure them to the tables outside the 400-person speaker hall and start chatting to management, which will be there with additional brochures and stuff, to talk about, okay, why do you think you are going to be successful with this story path that you mapped out in your 10, 12 minutes? And then after that sort of typically hour to hour and a half session, we march off and have a Q&A where the audience, those who are interested, go into a separate room and sort of ask questions directly. I pose questions of the company reps, and the audience members pose questions. And then I march off to do private interviews with each of the company representatives, which turn out to be almost like an appendix to the presentation, where I dig deeper into the story, ask some harder question. You don't want the geologist type to bore you during the main presentation. You want them to hook you with the story. And then if there's some complex aspect, I can pull that out in the Q&A. And all of this stuff gets recorded so that if you cannot be there in person, it will be posted on YouTube, and you can check it out, see how the company did in its presentation, how much they squirmed when asked a question that wasn't a total softball during the interview. But to go in there in person, it's at the Rosewood, it's downtown Vancouver, it's at the intersection of Georgia and Howe Street. It's a wonderful old hotel. It used to be called the Georgia Hotel. It hasn't been there in over 2 years because of the COVID pandemic restrictions. So I'm really looking forward to it. It's a small venue. If I'm there on the floor, people can see me. They can approach me, talk to me. And for me, it's also with a small group of 25 companies. I'm curious about, what my peers have recommended, and I can, wander there and talk also to the management and see what's your story about, and I can come up with additional ideas beyond those which I've generated on my own. So the whole venue is really good. And they have 2 coffee breaks with pastries, a lunch, and a cocktail reception on each day. And guess what? That's all free. So it's kind of an elite conference for serious investors in the resource junior sector, and I do urge anybody who lives in the Lower Mainland go get on one of the SkyTrain lines and show up, ideally on Monday, but on Sunday, and also Monday's fine too. Monday I'm more free to sort of just interact with people. I'll be hanging around in the main area, so if you want to go visit and see me in person, the Metals Investor Forum is an excellent choice.
What is the Vancouver Resource Investment Conference like that you'll be attending on May 17th and 18th?
That conference is being held at the Convention Center, and I will be attending it with the plan to do my own research. I am not speaking at that conference for almost 2 decades, since 1994. I was a speaker there when Joe Martin ran it. It's now run by his son, Jay Martin. As a result of Joe sort of stepping back and handing the reins to Jay Martin, and the difficulties of the resource junior bear market, the Vancouver Resource Investment Conference, which we used to call the Cambridge Conference, they decided they would not pay speakers anymore. And the reasoning was that most of the speakers are flogging some sort of service. They are a fund, that they're a brokerage firm representative, or they're a newsletter type person such as myself. But one of the trends that they'd seen was that the newsletter writers, many of them have special relationships with the companies that they recommend. They're sponsored it in some way. And so what they're really doing is flogging their products to the audiences. And at one point they even thought maybe we should charge these speakers to speak, because they're getting an opportunity to sell their newsletter or their product to this audience that we pull in. But in the end they decided, no, we'll give you the privilege of speaking for free to sell your product. So they've got several dozen speakers, haven't seen the agenda yet, and people can go to this conference and pick their favorite speaker and listen to the whatever combination of macro talk and specific stock picks about what they happen to like. One thing that has changed is it now costs $39 to attend. So I'll be going online, buying my $39 ticket, and going in there. And I, of course, have no interest in these 24 speakers peddling whatever products and wisdom that they have. But there are 250 or so junior companies exhibiting. Now that's a huge number, and the floor's only open 7 hours a day, so that's, if you ignore all the other talks, you got 14 hours, so less than 2 minutes per company. And so you ask yourself, okay, all these companies look similar. They got well-dressed people behind the in front of the booth with posters and stuff there, the name of the company. But if you're looking for a new idea, where do you begin? How do you sift through 250 companies and not waste your time randomly walking up and asking, what are you all about? And that is a big problem. And these companies, they pay $5,000 to be there, including the rental of carpet and chairs and table and things like that. And so that the conference pulls in $1.25 million just on these exhibit booths. And many of the companies say, well, the real purpose of this is not to get new shareholders. It's to enable existing shareholders to come to the conference, to track down the companies that they own shares in, go visit the booth, look the representatives in the eye, chat with them. And the whole purpose is to keep these individuals as shareholders rather than lose them for something else. And that in its own can be very easily worth the $5,000 in the 2 days. Representatives have to stand there waiting for people to come visit them. So, but for somebody like myself and for KRO members, the $39 is a very good investment, because what I have at my disposal is the Kaiser Research online site with its search engine. So I've input all the 250 companies that are exhibiting there, and I can now do a search and look at them all, go through it over the next 2 weeks. I'll be going through there, seeing who is all present. And interestingly, about 20%, 45 or so of the company are existing bottom fish spec value tag company or favorite. So 20% of these companies are ones that I already have a favorable opinion of. Most of them don't subscribe to my service. Many of them don't even know that they have this positive rating. But for my subscribers who are able to be in Vancouver, they can use this tool, add in the bottom fish spec value rating as a parameter, take the VRIC parameter, and then go through there and make their short list of companies to check out. And of course, what I'll be doing is, it's been 2 years since I've really had any personal contact with anybody. I'll be going in there to meet people I haven't seen for a couple of years, reconnect with them. And then there's ones where I've simply spoken on the phone, or even some of them I haven't even spoken to them. I've just done deep research through all the online resources. So it'll be a chance for me to walk up, introduce myself, so that when we do speak on a phone, there is a face to go with the name. And of course, I'm also interested in companies I don't know anything about, because, although we try and keep track of all the basic information, to find out what the story is of a company requires some work. So I'll be using my search engine to look at all the ones that I don't know anything about and look for diamonds in the rough that I need to track down, check out, see what they're like, and visit. For example, I'm very keen about Lithium Mania 2.0. So I've already done a search, and there's only about a dozen companies that I can easily tell are involved in lithium exploration in some form, whether it's pegmatites or brines. As I clean up my lithium database, there'll probably more show up. But the fact that there's only a dozen or so, less than 5% of the companies present, is a good sign that Lithium Mania 2.0 has a long way to go. So I don't know if people who pay $39 who don't have my search engine tool to do pre-research on and go there and have their short list of several dozen companies that they definitely want to walk right up to buttonhole management to ask deeper questions. I don't know if they get their $39 worth out of that, but I certainly get my $39 worth out of that, and so do my subscribers who are able to use this search engine and create a short list among these 250 companies that are exhibiting at this conference.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.